Hello, everybody. I hope everybody is doing well. Um, Thank you guys all for helping me grow this community. I just want to express my gratitude towards you guys and want to express my gratitude towards ICT. Thank you, ICT. If you guys don't know and you're a new watcher, he is my mentor and he could be your mentor as well. Just go on to his channel. Amazing content, amazing value. All of this stuff is his intellectual property. None of this stuff would be possible without him. Thank you, ICT. So, here we have it. Today we're going to talk about the Purge and Revert theory. This is going to be a little complex topic. Um, it's going to be hard for me to express due to the simple fact that, I could look at it easily. I could look at it a lot easier, but it's just a little complex. So bear with me. I'm going to try my best as I am not ICT. I'm just somebody who is tutored by him. But it's just an idea that came up to me, and I've been kind of using it to trade on the lower time frames because I am a scalper. So this way of looking at the purge and revert theory best suits my personality. And he also explained that you could scale this. You could scale this down to all other time frames, and I'm just simply scaling the theory down to the time frames that I trade, which is primarily, my higher time frame is primarily really the daily time frame, of course, that's just to use it as order flow. But the hourly time frame is my sweet spot, and I look for my entry models or my entry techniques down on the 5 minute and sometimes even the 1 minute. But this is just the way I see it. So again, I take no credit of this in no way or shape or form. This is all ICT stuff, all his intellectual property. I'm just a student, and I'm a guy who speaks on YouTube. You guys know this. So right here we have a risk disclaimer. If you are new to the marketplace and you just started trading any of these asset classes, I recommend you to read this through. I am not a financial advisor in no way or shape or form. As I said before, and you guys know this, I say it in every video. I'm just a guy who talks on YouTube. Simple. All right, so obviously we have to discuss and review some terms before we can proceed into the actual lesson. Um, there are forms of liquidity, correct? And of course, if you haven't watched the Purge and Revert video, the actual ICT video, it's on his YouTube. I'll have a link in the description below. It is very important you watch that video before you even come close to watching this one. I mean, you must study that video if you want to know what I'm talking about here, because this is a little bit complex. Um, it's not hard, but it's just complex, and you just must understand the material before you could decide to scale it down to other time frames and decide to use it for yourself in the best way possible. Okay, so just go on his YouTube channel, watch that video, because it's a must. It's a prerequisite in a sense in order to watch this one. Okay, so we have forms of liquidity. So here we have obviously external range liquidity. External range liquidity would be used in the form of a swing low or a swing high. Okay. Then there is internal range liquidity. Internal range liquidity would be in the form of a SIBI or a BISI. All right, that's just an imbalance. Um, Here we have internal highs and internal lows, and that would be in the form of retracements. And we're obviously going to see what it looks like here. So this right here is a trading range, correct? Easy, cool. So this would be the swing high and this would be the swing low in this trading range. So this would be the absolute high and absolute low. So with that being said, if that is the absolute high and the absolute low, what is that? The external range liquidity, because the liquidity that rests above this and the liquidity that rests below this is outside of this range. So that is why it's external range, okay? Then we have internal range liquidity. So liquidity could come in the form of, as I said, a SIBI or a BISI. So here is sell side imbalance, buy side inefficiency. That's what it stands for. And if it's BISI, it would be buy side imbalance, sell side inefficiency. Okay. And then we have a retracement. which is an internal high or internal low. So this obviously is a um, expansion, a bearish expansion. So it's a down expansion pretty much. And it may not be clear to you now, but I promise you, if you any time you see a fractal that looks like this or a leg that looks like this, you may not really see any major retracements in this, but I do. Okay, and it's simply due to the fact that if I were to turn this into a line graph, it would be a down push here, and then it would obviously have a up push here because of this bullish candle. It may not be a huge retracement, but this in itself is a retracement. Okay, and then we have price going down here again. So expansion, retracement, expansion. Okay, so above this high, because this is inside the range. Okay, internal, external. So up here, above this, there will be some liquidity resting. And the reason why being is because of somebody who sold up here, obviously, they'll be trailing their stop loss all the way down here. And most people just always refer to market structure. And if you're looking at this from like a market structure stance, they would possibly put a lot of people would trail their stop losses to here due to market structure being this way. And so above it, there'll be liquidity. And that's that. And I also wanted to go over imbalances, inefficiencies. Just a quick reminder. Imbalances are not the same as inefficiencies, okay? Now, an imbalance is when price has been delivered in one direction, okay? So, in this sense right here, there is one candle. So, in the near term price action, right, there is no buy side delivery here, nor buy side delivery here, okay? To the left or the right. So, this is an imbalance because it lacks delivery on the buy side. Okay. Now, the inefficiency comes where there is the lack of the other side. Okay. So the lack of the buy side delivery. Okay. But the imbalance is just simply a displacement in a sense. Um, and the inefficiency comes where there is a lack of the other side of the liquidity place in this range of price. Okay. So in this time in price, price has an imbalance and there is inefficient pricing because there is a lack of other side of liquidity. So there's only sell side delivery inside of this. There's no buy side delivery inside of this. Capiche? I hope you guys understand me. Like I said, it might be a little hard to express these ideas. So my eyes, my visual, my eyes, you know, obviously my brain process processes this information so much quicker. So I'll be able to look at it and I obviously know what I'm looking at. But if I have to express it to somebody else, obviously you need a little more insight to understand this. And to express it is definitely a skill that must be acquired. And obviously I'm still learning and I'm a student. As I said, I am not the master. I'm not ICT. So for ICT, it may be a lot easier, but just try to comprehend me. And I'm sorry that I have to say this, but some people may not like the fact that I'm speaking a little slower in this video or that I'm trying to explain it in a way that they understand it or trying to dumbify it. But it's kind of hard to dumbify this. Um, in my opinion, I think dumbifying it would be making it make sense for you, really, because this is obviously complex insight. So, um, also, when price is inefficient, it could also mean that it could be the speed that it was delivered in, right? So maybe they wanted to deliver price faster to a certain level. So price, you know, reached the liquidity fast. So that gives you some level of insight of knowing that, hey, the marketplace wants to go to a level of liquidity extremely fast. Why? I don't know. Think about it. And so a good way of understanding this would be, let's say you had a pen, or ICT explains it with a paint roller analogy. It's actually a very perfect analogy. So for me, the way I understand it is because my dad actually paints. He has a company. He's been doing that for a very long time, so I obviously been around his work environment, his workplace, and he's allowed me to paint. I've helped him also as I got older. Um, and it's simply like this: when you paint extremely fast, like so, let's say you're at a wall and you're using a paint roller and you're painting that wall extremely fast, like I mean ridiculously fast. Um, you may not coat the wall in a way that it's balanced or it looks clean. Okay. Try to visualize that. Okay. Or a easier way probably would be to understand. Let's say you have an ink pen, right? And you know how sometimes when you try to write too fast and have a fast way of writing with the ink, you'll realize that the ink sometimes like skips or like like it kind of blanks for a bit and then you have to kind of go over it again slowly so it could be fully coated in the ink, and then the letter that you write or the number that you write would be, you know, extremely clear because you took your time to write it down versus doing it extremely fast, and it may skip like a line of paper, like a point in the paper where you went fast. It might be a little almost invisible, you know what I mean? But it would just be there. But let's say the transparency would be a lot lower. So just try to picture what I'm saying. I know it's a little hard for those people who are new to this, but like I said, if you haven't watched the other video, go to the other video and understand that first before anything else, okay? So let's just move on a little bit because I don't want to be too tied up in this segment, but I hope you guys understand this the way I explained it. But let's go on to the next slide, okay? So here is a presentation of what it is when liquidity is purged, okay? So ICT has a pip reference on how much pips he likes to use when he's trying to buy a liquidity purge or sell a liquidity purge. He has like a pip reference, and I think it was in Forexmas. Um, you guys could go check that out. That was one of the first. I mean, that series right there is undeniably one of the best series in ICT's YouTube channel. It truly is, and I'm telling you because I'm a charter student. Obviously, I've been trading with ICT or ICT concepts for a while now. That's been almost about 4 years. But um, I started back in 2018. So here is a presentation of his pip reference, and 10 is normally the sweet spot. So he likes to wait 10 pips, or he'll wait for a price to raid a certain liquidity level, 10 pips. And obviously, if you want to be more precise, like sniper entries for those obsessed kids out there, those maniacs, and they want to buy this, they would obviously buy it 15 pips. Okay, so for me, the sweet spot is 10. I just find myself having more consistency and being able to get in a lot more trades, just only asking for 10 pips from a certain level. 15 is asking for a lot more, and in my opinion is not low hanging fruit. So that's that. Let's go on to the next slide here. And so this is the logic. This is the lesson that what you guys came here for today, okay? And obviously I'm doing this because I want to thank you all. We're about to have 1,000 subscribers. I really want to appreciate you guys for um, allowing me to provide value to you guys and helping me see that I am valuable. Maybe what I do know is valuable to some of you, and I've heard that a lot of you guys have been receiving a lot of help from these videos, and I am more than glad. I mean, you guys bombard my comment section with a lot of love, and I want to appreciate you guys all. Thank you for the support. Um, I'm truly blessed, and I'm truly humbled in being in your presence. But this is what I was talking about. So when you watch the other video, ICT talks about the 3-day look back, okay? So, as you guys know, I am a scalper. Um, it's very unlikely for me to wait for a daily fractal to occur, unless it's absolutely necessary, right? But in most cases, I don't really need that. Um, like I said, I just really use the daily time frame for key levels and pretty much order flow and the direction of where the market is going. And I just want to see if you know bullish order blocks are being respected, bearish things are being respected, bullish things are being respected, vice versa. You guys get the idea. So this right here is not the daily time frame. This right here is obviously the hourly time frame. And you're going to be like, but why are you using the hourly time frame when ICT strictly said that I have to use the daily time, the 3-day look back? Right, if you listen to the video, he also explains that this is scalable on other time frames. He has not gone over that like in precise details in the YouTube community. At least to my knowledge. I haven't watched all of 2022 mentorship. I've watched certain videos, but I've just been so caught up with life and other things in my life. But I'm still studying, of course. But there was a time in my life where I had obviously a lot more time to study things like that. And he is just somebody who provides so much value. He uploads every day. So I sometimes can't find the time to do that. So besides the point, this is where I'm getting at. So I'm a scalper, and scalping suits my personality. I am young. I am aggressive. I'm competitive. And these are just some of those things. I'm also very impulsive. It's one of the things I have to lay out flat. I'm also very impulsive. So, in order for my brain to be satisfied, in order for me to be satisfied, my personality, I need to have a lot more frequency than a normal trader to be in this environment. And I'm not saying it's possible for me to day trade. I'm not saying that. I've obviously sometimes I know the environments that I perform the best in. And so sometimes I absolutely love holding, you know, one shot, one kill trades. And then there's other times where I just absolutely love scalping. And scalping, that's like kind of like short term trading. And scalping is like where I love being at. So it's just something that my suits my personality best, right? But anyways, to the lesson. I'm using here the hourly time frame. Okay. So let's say, obviously, as you guys saw, the red line here is the liquidity level. So it's the liquidity level that I was anticipating for price to be purged, okay? Or that we anticipate for price to seek to purge, okay? And then obviously this is labeled here. This gray dotted line here is the 15 pip purge. And obviously I'm going to use the 15 pip purge because it does look a lot prettier. I will admit to it. This is hindsight, but just take the time to appreciate the information because it is useful. So, and I'll show you how it's useful. You guys gonna be like, "Oh, you better show me." You're probably not. No, I am using this. Trust me. Everything that I show on my YouTube, I use. Okay, this is how I understand it. So, let's say you're a person who does not appreciate waiting for the daily time frame to give you that 3-day look back period. I'm a person, like I said, where in order for me to be satisfied, I need to be in and out the marketplace. I can't be waiting 3 days, 5 days, 6 days. I'm just more comfortable. My risk appetite, it helps me sleep better at night when I know that I'm in and out of a trade quickly. It may take 45 minutes, it may take an hour or 30 minutes, it may also take sometimes 5 hours. But I am just happy that I'm able to secure my profits and I'm able to sleep at night that way because I know that there's not a position open. And sometimes it takes a level of patience and a level of certainty and confidence when you are holding positions out for a longer period of time. And obviously, I've only been in this game for 4 years. So maybe one day I'll get to that level of, certainty and conviction. That price may go in my favor for that long, but I'm just nimble, okay? I like my quick in and out. I like to get paid on partials. I am that guy, okay? I am very frugal about the way I trade because even if I get 50, that to me is amazing, okay? So even if I get a 10 pip range, that to me is amazing. Like, trust me, I'm very frugal on it. I'm not over here trying to hit home run or huge pip balls, okay? So just forget about that. But here we have it. So if you guys understand how the Purge and Revert model works, obviously we're looking for the purging hour. And then from that purging hour, that same purging hour is where we will start our look back. So let's say that I'm on the hourly time frame, because this is the hourly time frame, of course. Well, this one right here that I'm actually presenting you guys, this is the 5 minute time frame, but I'm just framing the logic off of an hourly time frame, okay? So instead of waiting for the daily candles to appear, I'm just looking at it from the hourly perspective, right? Because I could scale it down, right? I could even do 4 hour if I wanted to. You could even do 15 minute, 30 minute, whatever suits you best, okay? Whatever helps you understand this the best. For me though, I love the hourly time frame. It's my sweet spot. That's where I frame the higher time frame logic for me. And this right here is a 5 minute, and this is just showing you guys how the fractal works. So obviously ICT speaks that the purging hour is where you start to look back. So for me, I like to use the 3 hour look back. So let's say that price purged it, price purged it here. And if you go back into that video, like I said in ICT's video, he describes that it may take a candle or two or three for that purging to occur, the purging fractal to occur, okay? But I want you guys to kind of build a level of logic here, okay? Let's just say that because it's very clear that this candle was really the candle that purged this liquidity level. Like this was the first hour to do it, right? But the problem is, like just conceptually, just think logically, okay? This possibly, like this was that huge large candle, that down candle that was on the hourly time frame. That was that huge down candle. And this was the injection of liquidity. It was probably, like I said, core CPI, I believe, at 8:30. We just had this huge candle come in, boom. And we had this here. So if this is the purging hour, I know that the revert or the macro will only start if the break-on structure occurs on this high here, right? Because let's say I'm trying to buy this. The purge would happen here, but in order for the macro to start or begin, or this logic to even be confirmed, I have to see the break-in structure occur. But look at this range. Isn't this range fairly large to you guys? So isn't this candle fairly large to you guys? And it would require another news impact that is as impactful as core CPI news to go above and come here and break on structure. This structure right here. That would take a lot of volatility. I mean, and if that were to occur where you have this huge down pricing and then you have a huge up pricing right after in the next hour, those would be some extremely volatile um, market environments that I think it would be best if you stay away from. That would just be literally whipsaw price action. That would just be extremely dangerous. So thinking logically though, the way I determine what candle will start the macro is its range. Okay, so if I see that this is the candle that purges this liquidity, I understand that yes, I could frame out this high here, and this could be the area of liquidity that will start the macro. Absolutely. But this range is too large. So you know what I do? I say, well, if this range is too large, and it would require a lot of volatility for this candle to start the macro, I might as well wait for the next hour to show me more data. Simply due to the fact that it's more realistic for price to revert a smaller range like this, right? It's more realistic for price to break the structure here than for it to go all the way up here, okay? Because, like I said, this was an injection of liquidity. So, in order for this to be all rebalanced in just that short amount of time, that's just ridiculous. That's just madness. It would need a lot. You would need a lot of volatility for that. And again, if that volatility does exist at the time, then that means you shouldn't even be trading because that's just too risky. Okay, you would expose yourself to too much risk, and you would get negative slippage if you're wrong, and it's just not healthy. Okay, those are not healthy expansions. So we have this right here, and price just comes down here, and obviously we purge it. So I'm telling myself, well, let me just wait for the next hour to pan out itself. And then obviously if you're using the 15 pip purge logic here, you would by that you would just wait for that to occur. And it obviously occurs in this hour. So for me, this is the purging hour, okay? And obviously ICT does say that you could use that if it takes two candles, or the candle that we actually, well, the candle that starts to revert, or the macro. So this candle right here, it was confirmed with this candle, obviously here. But let's just say this was the candle that actually purged. ICT recommends that you use the this as a purging hour and this current look back. So then this would be like hour number 2, then hour number 3 back here. But I use it this way, okay? Like I said, this is just my way of understanding it. So the macro starts when price goes above this high. So we purge this liquidity and then we go above. We have this context here that we have that 15 pip purge and then price just turns around here. And then we have this recon structure that gives us a confirmation. So for me to determine or anticipate what candle will likely be the candle that starts the reverting macro, I refer to the candle that obviously has a small range. Now let's just say that this candle, when it came down here, it was an extremely small range like this one. Then yeah, we're gonna use this one. We're obviously gonna use this one. But the fact that this candle is so large, no go. We already explained that, correct? But this one is very small, and then obviously ICT explains that you do not need closure. So a closure above this price level is not needed, okay? But if a closure does happen, then that's even better, all right? If that makes you more confident. But here we have it. With this candle right here, we have this order block created on this hourly open. And this next candle comes in here and we close above or we go above. Remind you, closure is not needed. So, as you guys know it, I have a video. I think it was the weekly plus imbalances lesson that I posted. When this occurs here, we have an imbalance. So there was buy side delivery and then price just to efficiently trade um, this marketplace or this candle right here. It would come back down and have an immediate rebalance. And then it would just come here. And then this for me would be a beautiful entry right here if I wanted to get in early before an actual retracement occurred. So for me, I would have gotten here. I believe this range right here is about 20 pips, I believe, 20, 25, 22, something like that. But I would have evaluated this and I would have put my stop loss somewhere here. And I would tell myself, well, is this a good risk reward? I would have took it if everything panned out. And obviously, our target, as ICT explains it, is the equilibrium of the range, right? So, because when the revert happens, it's just telling us, okay, how far is price? We want to ask ourselves, sorry, how far is price going to go inside, back inside the range? It could go, like I said, back to internal range liquidity, and we discussed that in the other slide, or it could go back to external range liquidity, so it could go above this high, right? And so for me, I use the 3 hour look back period, right? And then I go down to the 5 minute time frame and I use the 5 minute time frame to help me achieve my entry. Okay. And here, once we get this revert, I'm automatically looking at the look back process. So for me, this would be the purging hour, then this would be hour number 2 and hour number 3 right here. And then this is would be hour number 4. But if we're going to use the original look back period, it'd be 1, 2, and 3. So we have the fractal of equal highs up here. So that right there lets me know it's most likely possible that we may go above this. And if on an hourly time frame, like there's a more dominant range, and this is like primarily in discount because it is, um, I would see this as a possibility to go up here. But ICT says once equilibrium is reached, probability goes away. Okay, but above this equilibrium price point, there is a SIBI and there's a huge imbalance. So for me, I know that price will want to seek that, right? So buying it here, I mean, there's so many things that are screaming here. So you could have bought it here at this order block. You know, maybe you could have seen this, the order block. Maybe you could have seen this breaker here, right? We all have a different way of seeing the market, and maybe you could have been like me, where I like to see the immediate rebalances in the marketplace with obviously the context in mind. This could have been my order block. Here we have an imbalance. This is an entry. Order block theory, we could have bought it here. Obviously, if you were inclined to buy it a little early, obviously I would have waited till the just for the purposes of the actual logic in mind. Once this structure here is broken, the macro starts, I would have bought it here. This would have been my high probability trade setup for me. and I would have held it all the way to equilibrium. And like I said, we have here the SIBI and it's screaming. So if you had a conviction of that, you could have held it a lot longer. Or if you had, let's say price has already reached its average daily range by New York, maybe holding it to equilibrium was the best option for you, right? Maybe that would have gave you the most level of certainty, okay? Now, um, if that would have happened, you would have waited for the next session, came in, maybe Asia or London, and then you would have continued trading price there because, the average daily range starts all over again when the next candle opens. So right here, let's say this would have been that. I would have entered here in equilibrium, you're done here. But you're still using the same logic. The only thing is we're not using the 3-day look back period, okay? We're using the 3-hourly look back period. And then we're going on the 5-minute or the 1-minute and we're adjusting it for scalping, okay? And this could also been your entry here. That would have been your rejection block right here. And then you could have entered off this, okay? Um, and then you could have held it all the way back up to the SIBI. But obviously, since we reached it, if you want to go by textbook definition, since we reached it here, the equilibrium, this, as ICT explains it, lets go of the high probability scenario, okay? But for me, I just knew that with the other context and the data that we have here with the equal highs and this SIBI here, I would have definitely been more inclined to hold it for a longer period of time. And look at this, right? When we come back into this range, we create more liquidity. So this in itself is creating equal highs at the equilibrium point. So this for me is engineered liquidity. So they engineered this as price was forming this logic. So I obviously you could have bought it this order block, this whole entire range could have been used, or you could just use a rejection block. So it's a down candle with a huge wick. You could have bought that, and that would have been your buy there. But according to time of day, if you were doing this for London close purposes, you could have done it. But for me, really, this would have not been a high probability entry, and I would have been more inclined to use the next session, um, most likely because um, once I would have got in here, I would have gotten out of, well, I would have got out right here. So let's just move on real quick. So obviously we have this right here is that same price action that you guys saw previously before this huge range. And then I believe this is Asia. And Asia uses that same level, that same price point here, this area here. And it continues obviously and clears out that um, relatively equal highs. And then just to show you guys that I use this myself, I'm not lying to you guys when I say I use these things. Um, this is kind of just a visual representation of it. Now, I use this in a very unique way. When price goes into a key level, there's also purge and revert. Um, the logic of purge and revert could occur as price is trading into a key level as well. So here I drew out this key level, the 1 hour order block, bearish order block, and then price here creates a high. We don't even puncture into that order block yet as of yet, but we do it here, and we also clear out this liquidity here because this is a level of liquidity, right? And then price obviously clears that high, and then this is the purging candle, right? So this is, let's assume this is the 1 hour time frame because that's how I'm presenting the information. Then this candle comes in here, obviously, and break structure, the next candle that opens, and then we come back into the range, retrace, boom, and then go down and expand, and then we have if the look back starts from the purging candle, I know that this is going to be candle hour number 2 and hour number 3, and then of course if this is the range that we're trading in, this is equilibrium. High probability obviously goes away, done after EQ, and that is that. And in here, somewhere in here, O to E would be offered, so wait for the break in structure. And so here, I'm going to show you guys just an example of what this would look like. So let's just say that line there was a higher time frame key level. This is a time where liquidity was resting above this high. Then this candle purges it. The next candle breaks the structure. So the next hourly candle breaks the structure and goes below. And then this right here initiates the macro. And then we have a daily range. So from this high to this low, this is the 5-minute time frame. This creates that daily range, and then you would get OT right here. And you also have a price range, a balanced price range. And then price in the hour that it hits that, you could see the reaction, boom. And then you kind of could use the same idea right here. Look, we clear this high right here with this candle here. This is the purging hour. And then obviously you would refer back to the previous hourly lookbacks. But since all the previous 3 hours are already cleared on liquidity, the logic pretty much goes away, and you have to use other levels of liquidity in order to draw um, an area where price is likely to go. But then you have obviously here displacement, order block. You guys know this from the YouTube mentorship 2022. This is high probability. Okay, so right here, boom, and you get that. So this is an example of where I use this setup or this idea. Okay, um, and it just happened to work. If it doesn't work for you, cool. It works for me. I have multiple examples of where this occurs in the marketplace, and you guys can look at it yourselves. This is extremely effective. So we have the Purge and Revert model, like I said, as we're going into the bearish order block here. And then we have this huge imbalance in here. So price came in, and obviously sell side imbalance, buy side inefficiency. It was an inefficiency in buy side delivery. So then price came up here, filled that imbalance, that sell side imbalance, and then we offered it the buy side delivery, and then price then became efficient, right? And then we have that purge idea right there where we raid this previous high, correct? And then this candle right here is a purging candle for me. And then we wait for the break in structure, and then we wait for some sort of OTE, and then boom. And then you'll have your 3 previous hourly candles, which would be this candle is hour number 2, hour number 3. This would have been our 3-day, or I mean our 3-hour look back. In other words, our 3-day look back, okay? But just know that we're scaling this down to a hourly time frame, okay? So this was the logic here. We had this trading range right here, and we had this bearish order block, which is that green level right there. And then we have the liquidity level, and then this is the purging hour, okay? So what I'm waiting for is the break in structure to occur so the macro could start, and the high probability will um, obviously start from this. So once we have that, you take this range, OTE, boom. We have here the highest order block inside this expansion, so the highest up close candle, and that is why I refer to that price point there. And then boom, you could have sold it right there, that level right there. Or if you would have used OTE, or you could have used these 3 candles as your bearish order block. Whatever works for you, doesn't matter. But there's so many ways to enter this and look at this. This also could have been some sort of mitigation block for you, right? Like a mitigation would have been like, this high, and then the lack of this failure swing right here. This middle point right here could have been your area of selling. That could have been your way of looking at it. So for me, when I entered here, obviously, I knew that that price started that macro, and I was just waiting for this retracement to occur. Once this occurred here, I entered here, and then we're targeting hour 2 and hour 3. And obviously, low-hanging fruit would have been equilibrium. But this is GJ, and you guys have to remember, like this, from this high all the way down to this low, this is a around 45 pip range, around there, 49, 47, what it was. I don't really remember. But this right here is enough. This is sufficient. So if you had you know, use the setup, what's the problem with just taking your profits at hour 2 or paying yourself at hour 2? Okay, at the second hour look back, What is the issue with accepting this as your target, as your terminus? Okay. Um, Maybe due to the fact that it was a day, I think August 5th. I think this was on a Friday. So for me, it was perfect to go for hour two, and it obviously offered a good amount of range. I mean, a good amount of pips. So for me, the opportunity was clear that hour two was definitely low-hanging fruit for me. So I took majority of my position off because this was late in Friday. Um, and these times are here. This is all. These are like. This is. I think this is the GMT time. So this is not adjusted to New York time, obviously, but 14 is 14 is New York Open, so that would be 7 a.m. And then from there, if you were to do that, 15 would be 8, 17 would be 9, 18. So yeah, you get it. So here, this was like the afternoon session for me, pretty much. I just traded this to this, and that's that. And we're going to show an example where I did that. This is that same chart you guys saw. Obviously, GJ, August 5th, you can see the fractal, same thing. And this was the absolute terminus for me, okay? This was the absolute terminus for me, but obviously when I was monitoring it, I actually paid myself here. I took out majority of the position off once I just evaluated the fact that it was Friday and it was late in the week and price already had moved a significant amount of pips and offered um, a huge range already. So for me, I just knew the likely of this happening that same Friday was, little to none. So the fact that I got this, I was extremely grateful. Took out majority of my position off here. And this is just me showing you that I use this. This is not just me blurring out words. No, I use this. Everything I put on my YouTube, I use, okay? Um, I'm not trying to gain clout off any, like, you know what I mean? Like, this for me is just something I genuinely enjoy, and I hope that you guys can receive value from it, okay? And so, to end off this lecture, okay? Um, there is a lot of things in here, and maybe there's somebody out there that could express this better than I can. But if you are that person, um, please please drop a video, and I would love to hear out your perspective. I would love to hear your logic. In a way or shape or form, is this the be all end all? This is the only way to do it? No, this is the way I see it. Remember that, guys. ICT did say it was scalable, and it was scalable down to from the daily time. If it's scalable, it can be done in all time frames. Most of its concepts can be done in all time frames, and I use it in a way that just works for me and is suitable for my personality, my trading style, and so that works for me. So I wanted to end this off with a beautiful verse from the Bible, and it's a very famous one. Um, you may not be religious, and that's okay. Um, this is in no means or way me trying to make you believe in Christianity, me trying to make you believe in God. If you don't believe in the higher man above, that's your problem. That is not mine. And if I lose subscribers over this or lose following over this, who cares? I don't care. Um, I am not religious. I just believe that I do have a relationship with the man above and that one who is looking after me. So I'll just end it with this, okay? Um, Let us not become, so obviously Galatians 6:9, let us not become weary in doing good, for at the proper time we will reap a harvest if we do not give up. Okay? So, uh, for those who are on this journey, do not give up, okay? Because what you're doing is when you're investing all this time and all this money that you're investing into this skill, this craft, what you're doing is you're planting a seed. What's the seed? The seed is you planting the time, the effort, the investment of money, right? And you're taking your time to learn a skill that is extremely hard, all right? And what you're planting is a seed for your future. So hopefully that seed that you plant with all the time that you're investing and all that effort that you're putting in, I hope that it plants and grows into a very uh, fruititious tree. Okay, so I hope you bear the fruits of a large tree with just so much abundance, so much success your way with trading, because this is a skill that is life changing. Due to the fact that in the process of you becoming successful. And of course, I go to this journey. Obviously, I'm in the journey. So for those who don't know, trading is possibly the best industry um to have self-development. So it just increases your awareness with yourself. It increases your ability to be honest with yourself. So it's known as one of those industries that help you the best with personal development and lead you to build character and develop into something of the best version of yourself. Okay, so this verse as well, in my opinion, can work for you and against you. So like this aspect, this logic right here, um, you could be doing bad things out there. There's some evil people out there, right? And they're out there doing things that are not benefiting them in the long run. And so this is basically you reap what you sow. Okay. So if I'm over here putting in the time and the effort, trust me, it may not show up now. But you know what's happening while you're learning and you're failing? You're literally planting a powerful root. Like the seed is building deep roots into the ground. So when it's time for you to sprout, you will be so successful. You will see so much value. You would find this journey that you're going through. You would find so much value. You'll be so grateful for going through this journey. And reaping planting seeds may be also not just you putting effort into helping yourself, but helping others, right? Because what you put out is what you will receive. So it's not a bad thing to be failing. Just remember that this is what is going to help you grow and be the best version of yourself, the best version of yourself as a trader, as a person. So keep planting great seeds, my people. Keep investing your time into this because this skill, again, is life changing. It could change your life for good. And just know that God has the best intentions for you. And your hard work will not be for nothing. It will be for something. And that may not be, being consistently profitable. That's not the only way you can reap what you sow out of this. It could be that you improve as a person overall, right? You could help others become the best version of themselves. Like there's just so much ways you could take this. And like I said, it works vice versa. If you're planting bad seeds and you're out here putting up content that you don't use or that you don't believe in and you're just doing it for the clout, the fame, you will get back. So let's say that led to somebody blowing their account because you lied about something that is absolutely false, something that's just trash. You, in return, will get that. It may not be today, may not be tomorrow, but it will be soon. And I'm just trying to say be very mindful and intentional with what you're currently doing in your current life, okay? Because there will be an outcome to everything you do, whether it may be good or bad. But besides that, guys, um, I hope you guys were able to receive some insight off of this. I know this lesson right here is a little more complex and it's not too easy to just understand like the other ones, but this one right here is one that can definitely help you improve. And if like I said, if you didn't watch that first Purge and Revert video, the one that actually ICT actually made and dropped on YouTube, there is no reason why you should be at the end of this video. Like if you're back here, you did it wrong, okay? Like I said, be intentional. Go to that Purge and Revert video. Watch it, digest it, back test on it, forward test on it, then come to here. And when you come to here, you'll then see what I'm talking about. So instead of you using the 3-day look back, you could use the 3-hour look back. Things of that nature. Okay. And if you want to go take it even further down, you could use the 30-minute, the 15-minute, the 5-minute as your purge and revert logic. Just be very mindful that this is the way I see it, and if you don't agree with it, it's okay. I'm not looking for you to agree with it. I'm just trying to make you guys see a deeper level of insight that helps me understand how the marketplace works. So that's been that, guys. I hope everybody has a great day and enjoy your weekend.